Everyone, this is Brad Matheny. Today is February 24th, Monday. We survived barely. Hopefully, you guys caught some of this move on Friday. And I have to tell you guys, thank you so much for all the great comments and emails, and even a couple of phone calls over the weekend related to my predictions. And some of you guys caught it very, very well. I mean, it's wonderful to be able to hear from you guys and to hear that I'm helping. Remember, that's exactly what I'm trying to do. I could tell you one thing that I want to try to do is help all the traders that I can learn to become better, more skilled, and more attuned to the markets, and particularly with regards to the type of research and analysis that I do, and to really, help you guys learn to target some of the best opportunities. So today, we're going to go over a bit of data and we're going to show you kind of what's going on. So, we're rolling into this trend, but let's show you some of the data that drives a lot of this analysis. So, this is the market ratio index, one of my custom indexes that I check every week. I actually check these throughout the week, but I publish them every week for my subscribers. And the long and short of it is we're getting a pretty solid breakdown. Okay, this is the market exiting this upward channel here, moving into a breakdown, kind of a devaluation phase. And it's not quite so evident through some of my other valuation cycle phases, like, for example, the devaluation cycle phase. You can see it's weaker, but there's no breakdown. Okay. This means we've been in a devaluation phase. We've been weakening, since prior to the election back over here in September, October, November. We had a little bounce back over here around the election, but then we've been weakening ever since. So, how the SPY has been staying up in this upper cycle trend, upper area, 608, 609, 610, is I would call it manipulation personally. But it just tells me that the markets are very, very weak. Now, when we look at the volatility index, the volatility index, same thing. We had this rally after the election, we had this deep downside move, and then we continued to flatten out. But we flattened out in kind of a carryover bullish trend. And I think that was mostly, I would call it a Trump bump, indicating that, Trump is good for the economy. It was in 2016, 17, 18, and likely going to be good for the economy now. But we've also got, the fear index has risen through the election, which means we're weakening in a sense that the last time the fear index moved up like this, in severity, we had some pretty big pullbacks, like right over here and back over here, 2022, with the Fed move pulling higher. So we're getting that bigger upward trending here in fear, which compounds with let me find it back over here, the smart money index showing that we've moved into a topping pattern. I've shown you this many times for the past 4, 5, 6 weeks, essentially since this top setup. I've been saying, I don't like this. This to me looks like a major top. I highlight the similarities to back over here. And let me draw it so you guys can see it. The long and short of it, guys, is it looks like a top pattern in the market. And I've been telling you guys this for 4, 5, maybe 6 weeks. So here and here look very similar, here and here, in the sense that we've come from this downward trend, rallied up into this upper area, peaked and rolled. Now, what we would be looking for over here is this roll to continue into deeper downward trending here and then have it move up and come back down again in a downward cycle phase like this. And that again bodes very well for my downward megaphone type pattern in the SPY. And again, everything is lining up right now for, let's call it, a moderate downward cycle trend. We do have some weakening in the base trend index, which means that the demand for US dollar based assets is weakening. I think you're seeing a lot of capital being pulled out of the markets, particularly in the high flying tech and let's just call it tech and dividend sector. I think you're finding that a lot of capital, a lot of people right now just don't have the tolerance for the risk that's coming. And like I said, we're moving into these broader cycle phases. Now, see if there's anything else here I want to show you. Well, I can show you this one chart that I'm waiting to turn into bearish trending. Friday's selling, as I'll show you here. This is a monthly chart, but Friday's selling did not amount to much in terms of a big breakdown on a monthly chart. Okay, just let's just plainly stated. It was a deep day for selling on a daily chart, but we're still up here near these upper channels, and we're still showing slightly bullish trending right now, just slightly down here. I would expect this to turn green with more selling or pause a bit and then turn green in March. But long and short of it, guys, we're not getting a whole bunch of real selling pressure yet. Okay, nothing that indicates screaming breakdown, except that we're getting somewhat of that same type of data on the daily chart, indicating that we're getting a big breakdown. Now, what I would also be watching for is a breakdown in the global and U.S. markets. The U.S. markets broke down on Friday, obviously. The global markets did not. They just paused out. So we're not getting that big kind of rolling global downward trend yet. Now, the U.S. market's moving down while this stays up is not unprecedented. It just means that the weakness currently is more isolated to the U.S. equities markets. And then lastly, I guess we'll look here. Well, let me find the leading index. Well, this is another one you want to look at. Consumer engagement has collapsed. This means you're going to find discretionary spending, possibly home spending, possibly new cars. As long as this continues to collapse back downward, this is going to move down into a very, let's call it deflationary engagement in the economy where consumers just are not playing along. Okay, that's another way to put it. They just will not be interested in playing along. So here's the U.S. leading index pausing a bit. Nothing really short, massive breakdown. We need to see how this plays out. And here's the cash flow index pausing a bit. No real big breakdown, but we do have that channeling that I still think is very, very important in terms of, we're getting kind of a broad sloping downward channel. And I believe that if we fail right here, we're going to be looking at a pretty big breakdown, which is what I think is coming into March. Okay, so we've gone through all of this, and we are going to come back over here, and I will show you where are we? I will show you the setup here for the market. We've moved into warning. I checked the biasing. Nothing has changed in the biasing. The biasing has gone from, on a weekly basis, from an active short position to a neutral short position. We're looking at a breakaway today. I think that after the big selling, we're going to have a pullback downward trend. So if I were to explain to you, this is daily. I'll come in here to 2 hour. And if I were to explain to you what I think, you can see the SPY is up at 603.11. It's up about half a percentage point. We're getting a breakaway trigger today. I would suggest that we're going to be looking at a move that, opens somewhere in this area. If we just follow where price is right now and then moves into moderate weakness, into a breakaway trend. And again, that's a little too long. So move it down like this, possibly down into the 597, 596 area today. I think that's pretty common. I think we'll see some follow through. Then tomorrow we get a rally pattern. So tomorrow we get a rally in carryover trend. I think that's going to be a pause move in the market, kind of basically setting up kind of a moderate rally like this. Then we get the inverted rally, and I think that's going to move us down into a deeper, maybe 591, 592 type of area. And so you get the idea here. We're basically rolling into a gap up higher today with probably some moderate weakness, maybe trying to get below 598, 599, then a maybe a gap down early morning with a solid pullback, trying to get back above this 600 level, then a breakdown into 599, 598, and maybe moving down into 593, 594. This is a pretty solid weakness in trend, guys. And I don't think we're going to find a whole lot of support until we move into Wednesday, Thursday or so of next week. So, that's going to put us around the 26th, 27th. And I can drag these back a little bit. I drew them a little too far. Whoops. Too far forward. So that gives a little better example. I think we're going to be looking at support around Wednesday, Thursday, and moving possibly back into a sideways channel. You can see here, once we get past this counter trend rally, we have a weekend gap, weekday flush pattern. This could end up being a bit of a downward trend. Then we have a gap up lower pattern. Then we move into an up and counter trend, which would be a down up down. That would indicate that this would be a down bar, an up bar potentially here, and then a down bar here. And then we move into top resistance, flat down, breakaway, and rally. So that's around 3.7. So if we kind of play that out, we would be really looking at, something maybe along the lines of a breakdown, pullback, breakdown, pullback, breakdown, pullback, double bottoming, moving into that rally phase, and then possibly moving down into a deeper selling into the 12th, 13th, 14th, 15th. So, again, just trying to give you an idea. Right now, we're just focusing on this week, which generally is going to be fairly volatile and rolling downward. Okay, that's what I want to tell you. Okay, QQQ. Well, let me come back out of this. So, we've kind of gone over the data. I'll leave this here, but I want to show you again that we are, breaking out of this excess phase peak pattern. Okay, we've clearly kind of moved up through here, hit this top, it rejected, and now we're doing a breakdown. So, you know, we've got to watch, and I'm just going to tell you, we've got to watch this 590 level. It's the last major support. I mean, we do have support here at 598.50, but I mean, we really have to watch these levels because these are going to be areas that the market's going to try to come down into and potentially breach. Now, if we get below this 590 level, then we're looking at a deeper breakdown. So right now, I'm not too worried about things. We'll see what happens. Just pay attention to that 590 and a half level, 590 level. If we get below that level on the SPY, we could see a breakdown into the 560, 570, 580 area. It could be uglier than we think. Okay, so these support levels are kind of like the line in the sand, the next floor level we're trying to protect. So now we do have quite a bit of weakness showing across variant stages. Now, this is the QQQ. You can see we've rallied on up into new highs. We've rejected, we've broken back down. We still have these same lows. So, again, pay attention to these deeper lows down here and pay attention to the fact that if we get a big breakdown, we're going to be looking at a big breakdown into these lows, and it won't take long. Okay, so be aware that if my predictions are accurate, we're going to be looking at a rolling pattern, possibly rolling down into these lows, finding some support, and then rolling back down into maybe even deeper lows into my March 21st, 22nd kind of range. So, where we're at with this is we've broken down out of this channel. So, we come up here, You can see I've drawn it. We come up here, up into this phase. We come back down here. We move into our excess phase peak pattern. And now we've invalidated it by getting above this high. We've tagged this upper area and rejected. And now we've started the breakdown pattern. Okay. You can also see this bigger one over here in green. That right now is also breaking down. So where we're at with this, guys, is we've now broken below that channel, both of them, and we should be essentially moving down to this level, trying to find some support if we can, or move down to this level and breaking. So understand that we are in a breakdown phase, an early stage breakdown phase, which aligns very cleanly with my topping setup. So be aware that we could be looking at a fairly extended downward trend. Okay. So now we'll go take a look at gold. Gold and silver are starting to make a good move. Gold is, at least. This is a 1 hour chart. We're up at 29.64. I'm going to tell you again that I think gold and silver could be making a very aggressive move to the upside. You know, you take a look at daily, and we'll come over here and take a look at daily. Try to get these to look like charts. See that gold is making a big, beautiful extended rally. And I think this is going to be a huge opportunity for traders. I've talked to you guys about this before. I think over the next probably 20, 30 days, gold is going to rally up here to $3,300, $3,400. I think that's a big, $400, $500 move in less than probably 30, 60 days. I think it's a huge opportunity. And I think silver is going to make another big move. Now, Silver is targeting, if we follow the graph over here, silver is targeting this $37 to $41 area. So kind of hard to see, but the reality is gold's making a big move, silver is lagging. When silver does make a move, it's going to be a big move up into this 43, 44, $42 area. So you've got some really good opportunity here. Silver maybe over the next 60 days. Gold, I think you're looking at like 30 days, 35 days to get up in this 32, 33, $3,400 area. It's going to be quick. And it's important for you to understand that this is that move into expansion. Very positive right now, very solid to the upside, and should be some real easy money for long terms option plays here. Just set it and come back and check on it, every Thursday or Friday. Make sure you get some time to let this run. And the opportunity is just tremendous for what you can see. Okay, and then lastly, we'll come back over here and we'll go to Bitcoin. So we're got a little bit of a bottom here. We talked about this rolling through. This is again a 2 hour chart. So here we go. Consolidate all of this down here so you guys can see it. And you can see we played through this excess phase peak. We've broken down into consolidation here. We're basically flagging into consolidation. I'll try to draw it here, but if you can see this flag setting up here and setting up like this, we're flagging into consolidation. And we're likely going to see this break down. Now, I drew this last week indicating that we've got this peak, we've got this low, and we're moving into this deeper flagging. But in reality, the next move here is volatility. So we come under this low, A, B, and come back down, C, D. So the next move here, guys, is likely into volatility, kind of like this, moving back down to here, consolidating, and then a breakdown. And I know that's not what a lot of you Bitcoiners want to hear, but that's the way I see it. I see that we're rejecting in this range. We've already broken this pattern here. So let me draw a circle here. So this move down to here into consolidation is essentially the active pattern right now. We are holding above this support level, which means the next big move would be a breakdown below this support level right here. I'll draw this in dark purple. So understand that we would be looking at a breakdown below this purple support level, trying to find some potential consolidation low for this pattern. Actually comes down to about here and sets up. So we would be looking at a breakdown, moving downward, trying to move into consolidation, and then moving down to an ultimate low. That's the bigger pattern setting up in Bitcoin. And I think we're close to that breakdown mode, which means if we get Bitcoin breaking down into the downward side, we'll probably get the Nasdaq and the SPY moving down as well. Gold may react to some kind of a move here, but will probably hedge to the upside as gold naturally does. But this plays into my, June, July, August kind of a basing bottoming for the markets, and a unraveling kind of devaluation phase playing out would be right in line with my expectations, really. So, okay, so we're moving into the beginning of the week. I want you guys to remember that we are still playing out what the market is giving us right now, which is pretty much this. This is how I see it playing out. Moving down into this February 25th, 26th low, wherever that happens to be. I think it's going to be in the 590, 580 area. Then basing, trying to get back up maybe to 600, 603, 604 by March 5th or 6th. And then rolling into a topping downward trend into our secondary bottom back over here. And I think that's going to be a very clean trending mode for all of us to be able to play out. And we'll see. So, like I said, don't get overly aggressive right now trying to buy into bases and bottoms. Just remember, we're kind of in a sideways rolling trend that ultimately, we've got to break some of these support levels. If we don't break these support levels at, 598.50 and say 590.50, then we're going to get trapped in another rolling kind of a peaking flagging pattern. I mean, you can see how you can almost just draw this line right across here and right across here and say, there's our flag. There's our ascending wedge flag. We're just broken out of it a little bit here. If we roll right back up into this flag, we're going to end up getting a pretty big volatile breakout over here around early March, it looks like, or before. End of February, early March, we're looking at a big volatile breakdown. Okay, guys, I'm going to leave you there. Go get some today. And remember, there are going to be sectors that are going to rally through this. You're going to find some stocks that are performing, some sectors that are performing, consumer discretionary, maybe not so much. Consumer staples, yeah, probably. Communications, yeah, probably. Upward. Healthcare, yeah, probably. Upward. Utilities, yeah, probably upward. There's going to be others that are weakening. And I think that we're going to have to go through this for the next 6, 7, 8 months. And then we're going to find a good solid base and we're going to start rallying out of it. So look for, follow me, obviously, but, don't start thinking of this as an upward trend. This is a devaluation unwinding phase that's going to take at least 5, 6 months to kind of settle. Okay, guys, that's it. Talk to you later.